Why is 2019 going to look different than 2018? Well, to answer that question, you really have to understand what changed in 2018. And then you have to realize in economics, when a policy changes, the impact is usually a year, year and a half later. There are a lot of feedback effects, indirect effects, unintended consequences. They didn't show up in 2018. They're going to show up next year in 2019. So what's changed? Well, in 2018, rates went up. When interest rates go up, interest expense goes up. And that's going to slow down the economy a little bit in 2019. Trade war. Well, the U.S. settled with Mexico and Canada. They renamed NAFTA. USMCA. It's almost like a song. Anyway, then the trade war with China. That one's escalating. And there's been big losers. U.S. soybean farmers are big losers. Big winners. China started to buy more from Brazil, soybeans, and Brazilian farmers are big winners. China also plans to cut long-term deals with Russia to encourage more soybean growing there. We'll see if that works, but that's in their plans. Oil supply has changed, up and away. U.S. shale producers looking at $70 oil, ramped up production. Now, U.S. shale producers, when they ramp up production, it shows up for the next 18 months. Oil prices are beginning to go down, but they're still high enough for more shale production. So lots more shale production coming in the U.S. in 2019. Saudi Arabia has ramped up. Russia has ramped up. The Iran sanctions didn't really bite as hard as some people thought they would. 8 countries were exempted for 6 months, and some of these were big countries like China and India. So we've already seen the impact from Iran production going down, and Saudi Arabia and Russia offset it. It'll be interesting to see in 2019 if OPEC even thinks about cutting production. We'll see. Anyway, another thing that changed in 2018 was actually the corporate tax rate. So we had a corporate tax cut in December of 2017, and in 2018 that helped support equities, it supported earnings, but the impact is waning and there'll be no impact by 2019. Now, what else did the corporate tax cut do? Well, it created a $1 trillion deficit for fiscal year 2019. That's huge bond supply increase, and bond supplies push up yields. And higher yields, well, that creates more equity volatility, and that's what we've started to see more recently in September, October, November of 2018. More volatility to come in 2019. So the questions are for 2019. How high will interest rates go? Some people think if the Fed watches the economic data, it'll slow down, a little bit of deceleration, and the Fed will ease off the brake and stop raising rates by, say, June. So they would raise in December 2018, March 2019, June, and then stop. But other people think they're just going to keep on going. And if you've read Jay Powell's speeches, that's kind of what he's saying. So that'll be one question. The trade war is another big question. Is there going to be a deal with China? Probably not. The Chinese are in this for the long haul, and it turns out that while the Chinese stock market's been hurt and the Chinese currency has been weak, the Chinese economy hasn't been hit as hard as we initially thought it would. And so China can really hang on a long time. It's in no mood to cut a deal. Then there's the equity markets for 2019. This is a question of earnings growth. Earnings growth is beginning to decelerate. Profits are still pretty good and will be in 2019, but the comparisons to 2018 are going to be really tough. So decelerating earnings, the market might be a little more volatile. And then we have FX. FX in 2019 is not going to be a US dollar story. Every country is going to be different. There's the UK and Europe. They got to figure out Brexit. Those currencies, particularly the British pound, are highly vulnerable to whether there's a deal or no deal. Brazil, fiscal reform could come after their election. That would be good for the Brazilian currency. Mexico, the currency was rallying after the election, but then they canceled their plans to build a new airport and the currency went the other way. That one's highly uncertain. And China, it all hinges on the trade war, but if the trade war escalates as we think it might, watch out for the Chinese currency getting weaker and weaker. So it's going to be an exciting year in 2019. And it was pretty exciting in 2018, but it'll be dancing to a different drummer. I'm Blue Putnam, Chief Economist, CME Group.